So adjusted trial balance, what you just see, we have 3 columns. Some of the companies really just use 3 columns. That's there in some of the business. They just stop at the 3rd column, which means that number is ready, and then they put the number to the complete financial statements. Other companies may decide to add another 2 column, income statement column and balance sheet column. Today we'll be doing an in-class exercise on this. Basically, it's the same information. They're just copying the income statement information to income statement column, and then balance sheet information to balance sheet column. There's just additional columns. Some companies want to keep the entire worksheet very complete before they get to financial statements, making sure debit equal credit. Okay, so today we'll be introducing a complete worksheet, which really you already know the first 3 columns. The unadjusted, the adjustments, the adjusted. We're just adding 2 more columns, income statement and balance sheet. Okay, so the purpose here again is still to support the business to do a financial statements that has the accurate numbers, that has the appropriate numbers that relates to all the transactions that happen within a certain period of time. Okay, so let's start from the accounting cycle. This gives you a broad picture of what we're trying to do in all the past few chapters that we talked about, starting from the first all the way to now. Okay, for each and every accounting cycle, we start from the beginning balance of the accounts. So meaning that earlier, last year, at the end of last year, when we do last year's financial statements, you will have, let's say, cash balance $1,000. Then in the beginning of this year, January 1st, 2013, we will start from the cash balance $1,000, and then we add to it, or subtract it. Okay, same for accounts receivable. Last year's accounts receivable, if it is, let's say, $2,000, that represents future cash receipt $2,000, that will be used for this year's beginning balance, $2,000. And then we add to that, or we subtract that. Okay, so last year ends 2012, December 31st. Whatever was the balance there for all the balance sheet accounts, we'll be transferring that dollar amount and use that as this year's beginning balance to start up the